Hi everyone, it's Christian from Serene Education. Going to be doing the 4 majors notes update for the second week of June. So that's the 7th to the 12th of June 2015. We're going to have a look at the euro against US dollar to start with, and then work our way through systematically. Okay, so starting with the monthly, tend to look at the monthly to start with. Give us a rough idea of how our price has been doing over the last couple of weeks of the month that we're currently in. So looking at the last couple of months, you can see price, we've been very much in a negative trend on the monthly time frame. However, saying that, we've now got into 2015 and price has kind of stalled, especially the euro against US dollar. We've seen no new lows since March. April we saw prices pulling back, not making new highs, and subsequently going into May, there again no new highs, there again also not making any new lows, and then going into June we've seen prices so far in the start of this first week, price pretty much pulling back. However, by the close of Friday, we saw price hugging the bottom end of that candle. So as it stands over here, you can clearly see that there is a resistance level, support and resistance level through 1121 change. Thereabouts. I mean, make the line bigger, thicker. You can clearly see there's some sort of hesitation. And if I actually pan out now on the monthly, go way back, you can see that we had a major upside trend start way back in 2001 to the current high in 2007 before we saw the market fall out of its backside. If I take a fib projection from there, so from the high to the low or the low to the high, you'll notice that where I've drawn that support and resistance level on my monthly where the pink line is, you'll notice that there is a fib level at that level. So if I just pan in there just so you guys can see it, the 38.2 level, there we go, 12176 and change, that is a major support and resistance level. Hence the reason why that horizontal line I drew in is pretty much there. So negativity. Okay, we've seen a lot of negativity in the monthly. However, we haven't seen a continuation of that negativity going forward into 2015. So the first quarter of 2015 out of the way, not seeing any new lows. We've actually seen a pullback. And if I drop down to the weekly time frame, you can see what price has done in and around that 38.2 fib level. We've seen a number of weeks actually trading higher than that. However, going forward, we've not seen price taking on the momentum and making new highs over those weeks that we saw break higher than the 38.2. Bearish engulfing candle 2 weeks ago. Having said that, we haven't seen prices really moving low again with momentum back towards those March lows again down here at 104488. And after the bearish engulfing candle here, we would have liked to have seen the daily candles moving lower, and then we could have targeted this level down here. That didn't materialize, as we saw more negativity coming into the market for the US market, more negativity coming in for the European market, a lot of indecision, and price has done nothing but go sideways. People are not willing to part with their hard-earned cash. They're not willing to pick a potential level or direction at the moment now because of all the hesitation out there. And that is predominantly, if you look at the fundamentals, predominantly all sitting, and the biggest talking point at the moment now is Greece. We're no closer to finding or solving the issue with Greece at the moment now. And we have G7 meetings that have started today, and then will continue tomorrow. So two days of G7 meetings. This is the G7 meetings, and they're made up of the 7 industrialized nations. That's Canada, Italy, France, Germany, Japan, the UK, and the big one, the US. Okay, so these are the big boys out there, the big boys on the block. They're going to sit down now and try and work out a way. And the longer things go on with Greece, the more uncertainty there is, the more uncertainty you see in the markets. We saw a lot of the indices moving backwards and forwards aggressively this prior week. Greek has decided not to pay the 300 million euros it actually owes the International Monetary Fund on Friday. They say they're going to actually kick that back until the next installment, and that's had a major ripple effect, repercussion on the futures market, and we're seeing that on the currencies markets as well. So what are we looking for the second week of June? Well, we've seen hesitation. You can see last week's candle, we saw some upside movement. However, by the close of Friday, we saw some fantastic figures that came out from non-farm payroll. So 280,000 new jobs were created in the US market. They're expecting only 225 or something to that degree, so way above average. and we saw the euro pulling back aggressively because of that data. And if I drop down to the daily time frame, you can see that on the daily Thursday evening closed, you can see we had a shooting star formation, so exhaustion here. So we could have looked for bearishness through Friday's markets day, and we saw that happening. But you can see within that range there's a lot of volatility, highs and lows, and price pretty much trading within that mid-range. So this week, ideally, if we are to see further negativity with G7 meetings ongoing for today and tomorrow, Monday, then we could see price becoming or remaining hesitant or range bound, consolidative as those talks progress. And only until such time as we come up with something, then we could see a continuation. At the moment now, the long-term bias has still been negative, but you can still see that there's a lot of indecision creeping into the market over here, and the indicator box is telling us that. Both the weekly and the daily, we're seeing a bit of positiveness and a bit of negativity, and that doesn't really stack up. Ideally, we'd like to see all these negative and the R squared complementing that negativity, or vice versa, seeing it all positive, and then we look to trade that. At the moment, there's a lot of uncertainty there, and you can see, just looking at the daily, last week's trading range, not looking good at all. And what we want to see now is some sort of direction. So seeing a lot of negativity, then going into March, April, and May, you could see that we've seen a hesitation in the market and prices moving higher. Having said that, price has been capped by the consolidated range that we saw in January of 2015. So the institution is still above price on the daily. Yes, we have blue candles. However, we're not above the institution. We're above the 20 and the 50. Perfect. Those are the near-term moving averages. However, the institution moving average, the 200 pair moving average, is still above price. And that is still governing long-term trend in this case, which is negative. So therefore, any trades we take against the long-term trend, we've got to do so aggressively. And you can see the hesitation that's popped into this. So going forward, if you want to see a continuation of the long-term trend, which in this case is negative, then we need to see new swing lows. And as it stands at the moment now, you can see that price is trading within consolidated range. Ideally, we'd like to see these levels down here at the 1922 and change level being breached before we see any continuation of it. So what I'm going to do is I'm going to plot some pivot points on here just to see where the next weekly pivot lies for the coming week and what we could potentially target going into the following week. So to start with, apply the monthly pivots. So monthly pivot for June, you can see that the monthly price is trading above the monthly pivot. So if we're in a negative trend, then ideally we want to see price trading below that monthly pivot. We're above the 20 and the 50 as well, so that's not good, because if we're on a negative trend, we want to see price trading below those two moving averages. In this case, they're below price, so therefore they're supporting it. Next thing, you can see that we have a blue arrow and the candlesticks are blue, so there's telling us there's more bullish bias at the moment, and the RMA and the OSMA are also concurring with that. So we have a loggerhead over here where we should be looking for negativity, but the actual chart is screaming positiveness. So that's not really good. And if it is positive data, then we need to see price making a new high. We haven't seen that at the end of last week, the first week of June. So therefore, we need to see price trading or remaining above the monthly pivot level here at 110845 and change, and then getting above, the most importantly, getting above that 38.2 fib level. That's the long-term major fib level. Got to get above that, and then we could be looking at that monthly R1 aggressively as our first target, and then back towards those institution moving average levels, which are way up here, which would concur quite nicely with the 2015 high that we've had at 1148 and change. That level should take us to around that level. Yeah. So as it stands at the moment now, we're seeing a lot of indecision, primarily because of all the issues we're having in Greece, and it will remain to be quite volatile and indecisive at the same time, moving skittish between intraday in particular, as we have that uncertainty unfolding within the Eurozone, and particularly with Greece. So that's the monthly pivot levels. So if we are to see for any trading opportunities, got to see price making new swing lows. At the moment now, we've seen swing highs, especially over the last week, in fact. So we need to be seeing price trading back below those current levels here at sorry, the 108870 and change level to start with, and then we can look towards that monthly S1 level. But S2, where that line is, that would be a far better area to target if and when we saw a continuation of the long-term bias. So at the moment now, what we're looking for is for some sort of direction. Any trades you're taking at the moment now will be quite risky, or risque, like the way to put it, because of the uncertainty that's falling out in this particular pair. Moving on to sterling, here again, this is the monthly. I'll just pan it so you can see it. Last month, very indecisive. We saw a lot of positives coming out for sterling to start with. However, by the end of play, you can see price actually closed back below the prior month's resistance level, and that not being really good in itself. And if I draw a fib level over here quickly on this, you can see that price is still trading above the 2013 support and resistance line. You can see through 2013 we had a lot of support through that period, and price is still above it. We've seen a lot of consolidation here again on this particular pair, like its European counterpart, and we've had a lot of good data coming out of the UK market, and that you can quite clearly see. But we're not seeing prices really moving on, and that's predominantly because of the uncertainty that lies within Europe. Because sterling relies heavily on Europe for a lot of our import and exports, there again we require a very strong euro bias to actually help with the GDP and as well as our own charting setup. So we're not seeing at the moment, and all that uncertainty is unfolding on the charts, and hence the reason why we're seeing a lot of indecision candles. These ones with a lot of wick and very small tight body ranges. So dropping down to the weekly time frame, this is the one we're really interested in looking at. You can see that we've had 2 prior weeks of pullbacks. This is still under the institution moving average on the weekly time frame. Having said that, the longer she spends above the 78.6 level here and the 76.4 level, then we could see a reattempt of the April highs back here at the 50% fib retracement level. So vitally important, even though the candlesticks are negative, we are seeing a potential support being forged here. So the overall bias on this particular chart is still on the negativity. So if we are to see a continuation of the negative trend that we've seen, like we saw with Euro, we need to see price breaking below this 78.6 level, which would then open up the floodgates for further selling sentiment back towards those March lows of 2015 that we've seen this year. So there we go. So roughly around there 145587 and change. But before that happens, we need to see a candlestick close this week daily wise, nice bearish engulfing candle of sorts, to then give us a bias idea that we should be still looking for selling sentiment, and then we could target towards that 145587, all those lows in March of 2015. Apply the monthly pivots on here, and you can see straight away that we have the monthly pivot is above price, which is good, because if we're seeing negativity, then the monthly pivot needs to be above price, which is perfect. The monthly S1 level would be a viable target to trade towards if and when we actually saw price making a new low, and ultimately S2, monthly S2 would be those lows that I mentioned to you here at 1467 and change. That would be a viable target going forward into June if and when we saw a continuation with the negative trend that we're seeing currently on the charts. US dollar Swiss franc. Now again, you can see that price has been trading within a consolidated range, and hence the reason why we've seen a very, very tight range over here. I've just applied the monthly fib level, and you can see the 50% retracement level here at 10185 is above price, and also where I've drawn that pink line. So clearly a major support and resistance level over the years through 2008, 2009, 2010 as support, and then from 2010 onwards as resistance. I've dropped down to the weekly time frame. There we go. If I can just pan in so you can see more. It's a bit squished over here. Apologies for that. You can see that very much in a consolidation range. Very, very horrible range. And if I drop down to the daily, you can see that the institution moving average on the daily, last couple of weeks, we've not seen any new highs on the US market. And last week, in fact, we saw a lot of indecision creeping after a bearish start to the week. You can see that we've seen a bit of consolidation and favorable non-farm payroll figures, we did see prices moving higher towards the start, but however pulling back aggressively towards the close of that particular day. So drawing the monthly pivots on here, you'll notice that the monthly pivot is below price, just below price. Candlesticks are negative, but we haven't seen any new lows over the last week or so, and that's vitally what we would need to see if we are to see further negativity for the US dollar against the Swiss franc. Failure to do so, and we see prices making further, building further support along the monthly pivot, would then put more emphasis on bulls coming back into the market, and we could potentially look for a trade back towards the institution moving average this week. Okay, so here again, got to see new lows created this new week, i.e. a nice bearish engulfing daily candle close lower to concur that prices for the US dollar are looking further weak, and then we could look towards that monthly S1 level as a potential first target. Failure to see a new low this week would then put more emphasis on the bulls, and then we could look for price back moving or trying to reattempt this monthly R1 level, which is above us here at what's that? 0.9682. So look a high for that to happen. So here again, got to see what happens on the fundamentals this week to then give us a bias on what we should be looking for. But ideally, to start with, I would go for a daily bear candle or bull candle, either way, to give me a genuine long-term out projection. Last bit of the day, the US dollar Japanese yen looking fantastically well. This particular pair, as the US dollar gains a lot more momentum. Fantastic non-farm payroll figures on Friday helped to really boost the US dollar against a weak yen, and you can see what the US dollar yen chart looks like at the moment, and we're just seeing further progression. So I'm just going to draw the fib levels on this particular pair. Just going to pan in here just to make sure I get these highs. So these highs all the way back in 2000 down to the lows in 2011. And you can see that the 23.6 level here at 129.23, which happens to be a prime major support and resistance level. It goes back to 2006. In fact, that's clearly been broken. We saw a nice monthly bull candle close after a consecutive 6 consecutive months of consolidation at the 23.6. Now we had a nice bull candle last month break and close higher, confirming that we're seeing a recontinuation to the upside, which is clearly in a long-term negative, positive trend. Therefore, we could look towards a trade back towards that 134.98, which will be the 2006 highs, and that would be a viable target looking to June, July, August of this year. So you should be looking for anything for buying opportunities on this particular pair. Drop down to the weekly. You can see a recontinuation the last 3 weeks. In fact, we've seen nothing but potential of bias moving to the upside. So this week, we want to see a continuation of that. So take the high of last week, drop down to the daily time frame. Straight away, you get a buy signal. Now what we've got to do now is look to see if we can see a continuation of last week's bullishness. So you can see last week, in fact, we saw Monday, Tuesday, Wednesday, Thursday. It was only on Friday after a fantastic non-farm payroll figures that we actually saw a bull candle close higher on US dollar strength. And that's we've seen a continuation of the overall bias, which is to the upside. So here, going into the second week of June, look for further continuations of that sentiment and look to see if there's any fundamentals that could actually bolster that positive movement to the upside. Okay, guys, so fantastic non-farm payroll figures. Look at any US dollar crosses for continuation of positiveness for this second week of June. There again is a lot of data out next week. We have, as I mentioned to you, we have G7 meetings that are currently happening right now for Sunday, and will continue again on Monday. And it's based around Greece. That's a talking point. So if you see any consolidation or hesitation on any euro crosses or globally on the futures market, is predominantly because of the issues that are the outlying issues that we have with Greece, and they need to be sorted out ASAP. And yeah, hence the reason why we've got G7 meetings occurring right now, because those economies, the biggest economies in the globe, are obviously going to be sitting down thinking now, what is plan B, what is plan, how are we going to get things sorted out, and that's going to be the major issue. So if we do see further consolidation, it's predominantly because of those issues, those underlying issues that happen in Greece at the moment. Okay, guys, other than that, I hope you have a fantastic week. Keep it as simple as possible. Please back up your trading with sound money management rules. and keep it as simple as possible, and you should be on a winner. I'm going to leave you with that. Until I see you guys again, trade serenely.